This is a demonstration of exercise 1419, computing operating activities cash flow using the indirect method. The problem gives us records of vintage color engraving, including net income, sales revenue, loss on sale of land, acquisition of land, depreciation expense, decrease in current liabilities, and increase in current assets other than cash, and the amounts, and it asks us to compute cash flows from operating activities by the indirect method for the year ended December 31st, 2024. So if you remember from your textbook, when we use the indirect method, we always start out with our net income. So to compute the net cash provided by operating activities for vintage color engraving, we're going to start out with the $36,000 of net income. Within net income can be non-cash expenses. So we look through our list to see whether or not we have any non-cash expenses. And the first one that pops out is depreciation expense. So what does that mean? When we purchased the asset, originally we spent the cash. Now we are only allocating the cost of that asset over its useful life. So this depreciation expense of $5,000 would have been subtracted from sales revenue to determine net income, but it didn't involve cash at this time. So that means we need to add back to net income $5,000. We also see that we had a loss on the sale of land for $4,000. So that means that when we sold some land, we sold it for less than the amount that we originally paid for it. But this was not an actual expense. Also, any proceeds from the sale of land would be in the investing activities section and not in the operating activities section. But the $4,000 loss on the sale of land would have been subtracted to determine net income on the income statement. So we would also need to add back that $4,000. The next items that we see listed that we would need to account for would be the increase in current assets other than cash and the decrease in current liabilities. Your working capital accounts are included in the operating activities section. If our current assets have increased from the previous year, then that amount would need to be subtracted from net income. So why would that be? There are different reasons why that would have happened. Either we may have spent some cash on items that we haven't used yet, or it could be that we have recorded some sales that would have been included in net income and we have not yet collected those amounts. So we would need to subtract that because we haven't received the cash. The next item is a decrease in current liabilities. If we have a decrease in current liabilities, we also need to subtract that amount from net income. The reason for that is it means that all of the expenses that we have charged this year we paid for, as well as an additional $19,000 that we had accrued or recorded as current liabilities from the previous period. The next thing that we would need to do to compute net cash provided by operating activities is to add up all of our reconciling adjustments. When we do that, we get a negative $20,000. When we add that to our positive net income, we get net cash provided by operating activities of $16,000. And that is the conclusion of the demonstration for exercise 1419.